Economies of scale, that's an economic theory, basically meaning that the larger space that you rent from an owner or from an institutional owner, that usually there's an inverse relationship between the size of the space and the rent. You know those little kiosks that you see at Valley Fair? Some of those guys are paying over $100 a square foot. And then you get a store like Nordstrom. Some of the Nordstrom stores, they don't even pay rent, because the landlords, these big REITs, see them as such a draw that Nordstrom says, I want you to build this, and they will move in on this day. So the larger the space you have, the lower the rent will be. Everyone likes free rent, right? The term that we use is fixturization period. So, for example, we'll go use the restaurant. It may take you 4 to 6 months, depending on the permit process and the construction process. And you may ask the landlord, hey, after I execute this lease and the clock starts ticking, I'm not going to be able to open up for business for 6 months, so I want 6 months of free rent. And he may accept that. Any questions so far? Okay, thank you. Okay, qualifying to lease commercial space. Credit report. Business history. If you're opening up a business for the first time, you better darn well have a really extensive, elaborate business plan that you're ready to provide to the landlord, because if you don't have any history, he's going to know what are your plans and how are you going to make it. And most of the businesses that are opening for the first time, I've seen landlords, the initial term will be a very, very low amount, like 2 years or 3 years. They also, if you had rented in a previous commercial space, they will inquire about your rent history and most likely contact your previous landlord. Another important factor, especially if it's your first business, is reserves. How much do you have in liquid assets? And you really need to conduct your due diligence and basically analyze what are your objectives for your business and how much have you budgeted for your rent. I can't tell you how many people have had me write offers on their behalf that have like $500 or $1,000 and they want to rent a spot for 5 years, and it's their first business. And a lot of landlords will say, you know what, I don't even want to talk to this gentleman. So you really need to have everything lined up. Another very important aspect when you're looking for a shopping center is the synergy that you will have with other clients. Starbucks, for example, they love to be where Noah's Bagel is. Actually, I should say vice versa. GameStop is a company that sells software for games and video games. They love to be in Target-anchored shopping centers like in Plaza de San Jose. So you need to think about that. And also, how much of a draw is your business going to bring to that shopping center? So these are all items that the landlord will look at. There are a lot of intangibles. Current market conditions. Well, I'll be honest with you, it hasn't been easy for me lately. I have quite a few shopping centers that have been vacant for over 9 months. And the owners that I'm working with, whether they're private landlords or institutional landlords, they don't care about the economy. They don't care that the consumer price index just jumped up 0.9 of a point. They don't care. They just want it filled. I also have found that a lot of business owners are presenting offers at, I would say on the average, 20% below market rent. And sometimes it just doesn't work. A lot of these landlords, they're not in the business to negotiate. So you're looking for a place. How do you determine fair market rent? How do you know what a fair price is to offer to the landlord? Because believe me, if you come in really low, the landlord will not even respond to you because he or she will take it as an insult. So if you have representation, a commercial real estate broker, they can conduct a rental survey. I usually acquire all my information for my analyses for fair market rents in different areas from appraisers. So a shopping center is sold. They'll peruse all the leases. find out the dates they were executed, and then we'll take a compilation of leases and then take the average. East San Jose, compared with all other parts of San Jose, has the highest amount of retail leakage, and that's a term that we use. An example is, we'll take a trade area of a radius of 3 miles. If the people in that area have to go outside that area to buy consumer goods that they need, that's considered leakage. And most cities like to have their people buy in their area. East San Jose had over 500 million in leakage from the years 1994 to 2000. So the city right now is really pushing for retail development. And I focus my business in East San Jose because I think that we do need more retail stores, and there's a lot of infill development and a lot of improvements that can be made in this area. And one problem that I've seen is that a lot of these developers or investors will buy old, decrepit shopping centers, and maybe they've had it for 20, 30 years, and all of a sudden they come in and they raise the rents way up. The triple nets change because the taxes, insurance, and maintenance are now based on a new price, and a lot of people are getting priced out of the market. And they're going after these national retailers. So it's kind of tough, but even national retailers now are really starting to put the brakes on. A couple years ago, empty spaces, you'd have 4 or 5 or half a dozen offers just, on the fax machine or in your email on a daily basis. Now, most of us are cold calling. We have what's called it's a Bible. It's called the ICSC Bible, International Council of Shopping Centers, and I have access to all the information of every retailer in this country. And I've been spending a good portion of all my days cold calling these retailers, and I'm getting a lot of no's. Nope, I'm sorry, we're not expanding, we're putting the brakes on.